Hey, what is going on, guys? Edward here, back with another video, and it's been a minute since I posted my last one. I've been very, very busy with a lot of things with the team, family things, and I haven't been able to post here in like past 2 weeks or so. So, promise that I'm actually gonna get back this week, guys, stronger. And I want to start this particular video now with an entry model from ICT. This is called the Unicorn. Um, I mean, this setup, you can find it all over YouTube as well. There is a lot of content out there talking about this one. So I want to specify a couple of things here. Want to explain what do I normally use, how do I spot it, and it's actually quite simple to understand. So let's get to it. Let's see what we can get here. So the theory is basically when it comes to the unicorn, we're seeing a structure uh, pushing up, and then the idea here is to see the next thing, the following. So we're gonna take this high. Okay, there's gonna be an important level. Right, that we're having here. Let me put this thing a little bigger here. Right. So price is reaching an important level. This could be an old high, right? From the left to right here. This could be probably a high that was created during London, and this is New York. We're currently in New York, right? Let's just, for this example, let's just pretend we're actually trading in New York session. So we have this high from far away, from maybe a few hours ago, that was created during London, probably, or Asian session. And then, okay, so what are the things we're seeing? So this is a buy side. Price is taking buy side liquidity from that old high. We're also sweeping this recent liquidity, right, from that buy side right there. Then we happen to have, after that, uh, we're going to be looking for displacement to the downside, right, which is that big move to the downside right there. This is going to be our market structure shift, okay? And if we measure this thing right here, um, let me put it this way. So normally, the unicorn entry model is this last push right here. Okay, we're going to be paying attention to this push. So basically, in this area, right after the price breaks, when the price breaks to the upside, this becomes my breaker. Okay, we're going to have to see, I'm going to explain to you, of course these are just lines at the moment, but technically this is the breaker block right here. Okay, this actual move, this was a demand zone, it was an order block, and then it got disrespected, it got broken, then price is coming back up, right, to retest, or it's also going to be touching a fair value gap that is inside this area. So whenever we have a breaker block, right? Whenever we have a breaker block, let me change this here. All right, whenever we have a breaker block, and on top of the breaker block, we see in this displacement to the downside, we spot a fair value gap. So we have on top of each other, we see the breaker block first, and then on top of the breaker block, we actually see a fair value gap. This is a unicorn, okay? So where can you take the entry? You can take the entry pretty much from that fair value gap. You can place your stop loss here, and you take profit lower. Okay, so that's sort of the unicorn entry model. So I'm going to show you, of course, on the charts, because with the lines you probably can't see it properly, but I'm going to explain it here very well. Let's jump on the chart. All right, so in this one right here, we see the New York session is just opening. It's 8 a.m. in the morning. So marking up highs, this recent high from London, I'm going to mark it up like just in case. Let's see if we are going to continue pushing to the upside. We have some lows recent, okay? Now, in this example, look at what happens with the price during New York, right? Right here, we're seeing price pushing up very strong, where C is sweeping this little internal, right? We have this buy side liquidity, and we also have that relative high right there. right? So we have that buy side, that old liquidity taken, right? I'm not just going with this liquidity. I'm also paying attention to see if there's a, a more prominent or a bit further away liquidity that has been taken. So we did sweep from here. Okay, I can see probably the setup or the candle is not properly well right here, but this below this low right here, this is going to be my market structure shift. Okay, or change the state of delivery. There's no wick anyways, but there, but that's going to be my market structure shift. So I want to see, before I start looking for the sales, I want to see the price displacing to the downside, right? Let's see what we get after that sweep. Boom, we're starting to displace. It's not closing just yet, but we did. That's a market structure shift right there. Okay, we do have the market structure shift. So technically, we're going to be paying attention to see what is happening right here. First of all, where is our breaker block? So in this case, you see, look at how many candles were right here, right? Bearish candles, bullish candles, bearish, bullish, bearish, bullish, bearish, bullish, bearish, right? A lot of candles. I cannot say, of course, in this particular example, that this entire zone is the breaker block, right? I cannot say that. What am I going to do here? So in this case, the actual order block, I see some traders actually taking like all of this. I see some taking just the last candle, right? That's the breaker. And you're kind of right, right? I've seen this actually on ICT doing it this way. You can also do it. I like to do is like, so I don't miss it. I like to take that series of candle. If there is, like for example, only one candle after this bullish right here, we see only one candle going bearish and then boom, the explosion to the upside. So, okay, it's going to be just one candle. But we have in this case a series of downside candles, right? So I'm going to try to choose, I'm going to pick this three candles, right? I'm going to try to ignore the week in this case. You can take the entire zone, including the weeks, if you want as well. You know, at that point, you're refining your breaker block. Okay, so it's up to you. You can leave it there and just cover the body of the week. Okay, now something we don't have yet, it's a fair value gap. We do have a breaker now, apparently, right? It's not breaking to the downside just yet. Let's see if we happen to have a little closure. We kind of like did close below a little bit, but this candle already, I'm sorry, I went a little bit too fast right there. This candle already had created that fair value gap. See that little pin bar right there? You see right here, we do have a fair value gap. So you are having already in this area. First of all, we had that sweep. Price just swept that liquidity from London session, right? We did have a sweep. Then immediately retracing back down, showing market structure shift. You do have a breaker. You do have a fair value gap. So at this point, this is a high probability trade. Okay, you could be taking the entry right here at the fair value gap. If you want to make the stop loss maybe shorter, you could be entering at the 50% of the fair value gap. It's up to you. Something I like to do is use the Fibonacci from the high to the low with that manipulation and use the extension so I know where I could target at least, somewhere between the 2 and 2.5. I look a little bit on the left to see if there is some sort of lows or liquidity that we could be taking, probably this low right here in this area. Right? But I like that 2.5. I'm using the extension on the Fibonacci. So let's see if we get tapped in. Remember, you could enter, again, this is your choice. You could enter at the fair value gap. You know that the fair value gap, it's already inside the breaker. So it's on top of each other, right? So this is a potential unicorn. So we get tapped in, the price pushes up, gets into the fair value gap. It struggles a little bit in there, but then ends up actually displacing, okay? And going towards our target. You see that the whole time the price respected our fair value gap and our breaker block. It never went higher. There are some times where price actually is going to get a little higher. Doesn't mean that it's going to fail. No, sometimes it just goes a little deeper into the zone. Okay, so don't get scared with that. All right. Now, of course, this is not the holy grail. It's not going to be working out all the time. You have to understand that. So let me get you another example. All right. In this example here, we've seen that the price has been sort of bullish for a little bit right here, the previous day. And now Asian session, London session, we've been pretty much pushing up during all night. So let's see what's going to happen. New York session right here. Because if we're bullish, the price has been pushing up. Right, you could be just trying to follow the trend as well. So I'm going to be marking up these recent lows just to see if we have some sell side liquidity being taken so I can catch buys, right, and continue with the trend. Now that I kind of have an idea of where the trend is going, so I want to follow the trend. So let's see what's going to happen right here. Looks like we had some news, 8:30 right here. This is the 8:30 opening, so most likely something happened right here. We're having some sort of news at that hour. Remember, this is Nasdaq, and I'm on the 5-minute time frame. So let's see what's going to happen after that. We are having now New York Stock Exchange is actually opening right here, and we're starting to displace. We're starting to sweep all this liquidity below these lows, right? So in the first place, remembering that we were kind of at least a little bit more bullish than we're bearish, right? Since price has been pushing up for the last 2 days, we could continue with the buys. So 8:30 had created this highs right there, and we are sweeping now with the New York Stock Exchange opening. We're sweeping liquidity. So now what do we have from this sweep? You see how many candles it took right there. It took a lot of candles right there to go into the downside. So um, if this thing is actually going to go up, and I'll be interested to buy, like I want to see price displacing above the opening price of this candle, right? Why? Because there was a drop right here, there was a pullback, and then after this move to the upside, we had a big displacement down. Okay. Now, I would like to see, if I want to buy, I want to see closure above. Okay. Now, because we do have also in this area now, this is our breaker, right? Well, it's not a breaker yet, right? Because it has not been broken, but we do have a potential order block right here, right? And in this area. So I want to see what's going to happen. I want to see if this order block uh, it's going to get respected or disrespected. So let's see what's going to happen right there. Boom. We got that explosion up, right? Price closes above this high. So we do have a change in state of delivery right there. We do have now this order block. It's becoming a breaker now because we did close above. We broke that order block right there. And on top of that, what do you see? You have a fair value gap from here to here. You have a fair value gap in this area. So now you have a fair value gap on top of a breaker. What is that? A unicorn. Now, in here, very important. Where is our entry? You could enter anywhere. Okay, be careful. Sometimes you might actually place the entry at the 50% of the fair value gap and you may not get tapped in. All right. So understand that my stop loss is going to be always below this manipulation low, and I could use my fib again to sort of have a nice target right here. So I'm going to use the fib from the low to the high. This is the Fibonacci extension. And this is just telling me where I could be targeting. Could be targeting that between 2 and 2.5. And I like to target that area. So anyways, we have our breaker. Let's see if we actually happen to displace now to the upside, especially this high. I like that buy side right there that was just created during the news. So let's see what we get. Price did tap in. Look at that. See what happened. If you were looking to enter at the 50% this time, you see what happened? You got left behind, right? Price did not touch the 50%. It did touch the fair value gap, the entire zone. It did tap in, but did not touch the 50% of the fair value gap. So people do this to sort of have a better risk to reward. But to be honest, what does a big difference? If you look at it, what's the difference from here? Your risk to reward is 2.33, right? If you just put it here, trying to make it bigger, it just goes up a little bit more. at 2.7. So it didn't even went up one, you know, so 1 point right there. So it's just a few, no biggie. That's what I'm trying to say. So if you don't want to miss your position, I recommend you just taking the entire, right there, the entire fair value gap. Okay. Going with this, sometimes if you want to be greedy because you want to take more money with you, it's gonna left you behind. So I recommend you taking that entire. So like, anyways, if it works for you, or you feel more confident that way. All right. But you see what's happening right there. We have a breaker block. We have on top of that a fair value gap. The fair value gap gets tapped in, and this plays now up. Again, beautiful unicorn right there. Let me get another example. All right. In this example right here, we see the price is actually trending up, right? We see the market is moving up like that. We're bullish. Okay. Now, in this area, let's see what actually happens after the price creates this high. Look at this. You see what we're having? This type of things. Let's suppose we're having a high right here also from, I don't know, London session, an old high that is being ran through, taking buy side liquidity. It's also sweeping this recent buy side liquidity as well here. So look at the move. Look at the shift on the structure right here. So the opening price right here of this 1, 2, 3, 4, 5 candles that we have to the upside, the opening price, that's going to be my change in the state of delivery. Okay. Or that's also another block, but that's for another video. Right here, we have the change in state of delivery. Market structure shift would be probably below this low. That's the market structure shift. And then what do we have? Okay, where's the order block in the first place? The order block that we had right here was actually in this area, right? This is the order block. Again, you want to pick the entire candle, including the weeks. That's fine. But these 3 downside candles before the price push, that was an order block, right? That order block get ran through and turns into a breaker block now. Okay, now we have the breaker block. We have to wait for the next candle to print our fair value gap. Do we have a fair value gap now at this point? Yes, we do have a formation right here of the fair value gap. Now in that fair value gap, you see, so we have, first of all, of course, you have to see if it's sweeping an important high. I don't know if it's actually sweeping it at the moment. Just for this example, I'm just taking this. Price was very uptrending. So I'm just letting you know, be careful. You don't want to take this sell just because it's sweeping this little internal. You want to make sure it's taking also something. If it's not taking anything, if we're very extended, let's say, I don't know, let's say price is creating record highs, well, you might take into consideration, and maybe you could be taking the shot right here. So but I'm making emphasis in that it's very important that price is sweeping an old high or low, in this case high, right? We're going to use the Fibonacci. We do have our unicorn right there, so this is going to be our entry. I'm going to place my sell limit order right there, my stop loss here, and my take profit somewhere in between 2 or 2.5. Okay, so from there we see that price taps in. Let's see how far it goes, or if it gets us out on break even. This is a trade that we should be on break even already. Consolidating, and it looks like it did hit it. Yeah, anyways, this is a currency pair, so we did this place to the downside at least between 2 and 2.5. This is normally where I target. Okay, so again, another setup for another unicorn right here. I hope it makes sense. If you understand, guys, or you don't understand, let me know in the comment section below. I want to hear from you if you guys are understanding. I do have a playlist on my channel based on ICT concepts. If you want to make sure to check them out, I'm going to leave the link in the description right here, and in the top of the corner right there. And if you have any doubts, any questions, please let me know in the comments section. I would appreciate your thumbs up if you like this type of content. It motivates me to keep posting videos for you guys. So I will see you in the next one. All right. Take it easy, guys.